Everybody, what is happening? It's Bill with Franklin Loan Center, and back to the myths topic that we've hit a few times recently. And this is one that's like every single loan has this conversation. And it's basically, wait, you're looking me in the eye and you're telling me that the lowest rate may not be the best option. And yes, that is right. So rates are really complicated to talk about in a short video, but long story short, we have a whole matrix of rate for every single program on any given day, right? And they're all over the place. And some rates, you can actually get lender credits. So you pick a higher rate, you get credits back. There's what we call a par interest rate, which means, no credits and no points. And then of course there's lower rates for paying points to buy down the rate, right? And so that's basically prepaying interest essentially. And so like when I have someone say, I just want the best rate that I can get. So the best rate maybe makes sense, but when someone's asking for the lowest rate, that's crazy, right? Because on any given day, like today, I can give someone I can give someone 5%, but it's going to cost a ton of money to buy that rate down to that, right? And so, why wouldn't we buy every rate down? Well, if you have any belief whatsoever that you're going to either move or there'll be a refinance opportunity or any reason to mess with your mortgage within the period that it would take to break even. So meaning that what's the monthly savings, what's the cost of the buy down, and how many, we always talk about it in terms of months, like how many months is that going to take? If you're going to make it to the break even point, then why are you going to do it, right? And that's the problem that I see all the time is people are like, got to have the best rate. I need 6% or whatever the number is. It's like, okay, well, here's the cost to get us there. And it'll take you 4 years to break even on that. Fine, right? So the great news is from years 4 all the way through the end of the loan, theoretically, you're ahead. The problem is what I see all the time is people get the opportunity to refinance. They want to pull cash out, they sell, they move, whatever it might be, and they never even make it to the break-even point and end up losing money on that buy down, right? So no, the lowest rate is not always the best option, and it's something you have to think about. And that's one thing when people are shopping around, we see this all the time, is people are seeing rates online for different banks and different places, and it's like some crazy low rate, and then you realize like, oh, that rate has a 1 or 2% origination charge to be able to buy that down or discount points. It's not always the way it works, right? So anyway, no, the lowest rate is not always the smartest rate for everybody. That's it. I'm Bill. I'm the Franklin Loan Center, and I'll see y'all next week.